Hello everyone, my fans, my dear. Thank you for watching. Today is September 21st. I'm going to talk about the stock market and give you what to buy and recommendations. For those who are actually closely listen to the news, I know that Fed have announced rate cut of quarter point basis point. It also had predicted that the market may cut two more times this year, which is in line with expectations. As Mark has predicted, the beneficiary for rate cut is small cap, which I will go into a video later on the video. It also means that the consumer cheaper in anticipation of mortgage rate and interest for financing the car payment. On sale figures that are announced, it doesn't really show sign of weaknesses, but the labor market, however, remain as a concern. Recent report indicated that major market index, basically like you see here, Dow Jones Industrial Average, have hit really 52 weeks record high. Nasdaq also reaching the high, and also S&P 500. And S&P 500, if you listen to my video, the last one was saying 6,600, and we already reached slightly above that numbers, and now the next target will be 6,900. That is where most of the top people were targeting, and the analysts believing that's where you're going to hit down to next level. And share or semiconductor also out of the beneficiary out of the small cap gain that was anticipated in the market. So it witnesses a gain of 6.26% over the previous month, beating the performance over the computer technology sector with a gain of 3.88%. And the S&P 500 gain of 2.32% last week. So for those of you who remember the video that I have recommended the stock ACLS, and I say you have to be patient. It takes time to take off. So in April, the timeline, the stock was hitting really hard in the 45 to 50-ish dollars. And I hope you bought it. I sold around $85 for transparency purposes, but now it's really hit very close to the $100 mark I talked about. So if you hold this stock, I highly recommend to you it's time for profit taking. You might want to reduce your exposures on that. The other stock also benefit from that small cap. From that perspective is HYLN Helium. I've talked about it, and for those who bought at around $1.40 level, I mean, it hit around at one point it was $1.70, $1.82, which kind of struggling around that ranges, and you have deeper a little bit $1.60-ish, right? And now it's at $2. So I think for those of you who bought at $1.40, $1.50, so which is 50 cents profit, it's really time to kind of reduce your exposure and profit taking again. I sold kind of majority of my shares on this a little earlier, like $1.80, 82-ish range. Okay. And so the next stock I really like, which I talk about to selling it at a pricing of $24 ranges, is the stock that called XPEV. XPEV. Silpan is $20-some is good time to sell, and then bought at $19 ranges, and now it's hit at $21.50. So I think this is a good time to try to sell. Looking at the stock to be a little bit higher, $23 range, and then you may be good to profit taking. This stock going to take still at a loss at this point, but again, I look forward to this competing with Tesla. And you see the Tesla stock, for those who hold it, you really have gone back and what a strong rebound to over $420 now. So it's probably a good time to think through to profit taking. But this is one of the stock I really believe in the infrastructure in place, looking forward for long-term gain and pushing higher to what it needs to be, for the future. But again, it has to be kind of patient and look through it, because the P ratio kind of pretty high for Tesla, but I recommend doing that. And same thing in alignment of that is another Chinese EV stock, PYDDY. I really like this stock, but again, this stock have actually suffering after the split of the stock shares. But in the long term, and also they have some price cut slashes and competition about among the Chinese EV, but out of Neo, Li, and XPEV, I still recommend that XPEV was my favorite, and BYDD is for the long term, because the battery that they producing and also the new style of the SUV is still really, for me, is still look pretty good. Then the next one I want to talk about is Alibaba, which Chinese stock have been very strong and bullish, really jumping very high. And Alibaba is a very quick notice. I bought it around $90-ish, $100, and I sold it $125 because a lot of time for those here some my video knowing that 25% is my kind of cut off of the short-term return. So this stock have been really continue to push very well to $162 level now. So something to think about if you want. You can hold it for the long run because I would highly recommend that as Chinese government now really focus on AI space. But you may consider also taking the profit and reduce exposures as the stock have really gone very, basically give you 50% return in very short timeline, which outpacing the market index. And same thing with Tencent, which the gaming, which they get lawsuit from Sony right now, but the gaming is really amazing, and the WeChat is really very. I mean, basically nobody would not using the WeChat in China, and they linked it to the wallet called WeChat wallet, your bank account to pay. And basically, daily uses, right? Just like American credit cards. So I think it's, the stock will continue to expand as long as the government really pushing the direction of AI for the future. Then United Airlines is another one that I bought it and I highly recommend it when in April when the stock had dipped back to $62, a golden opportunity to buy. When the analysts were saying, well, okay, we're in recession, no travel and whatnot. So this stock, as you can see, is highly quickly just a quarter, 3 months timeline, maybe a little more than that, and it really rebounded $100 level, right? And the 52 week high is 116. So I sold around 90 to 100. I pretty much sold majority of my stock at United at $90, and I bought at 60, which gave me 50% return. So again, I would think if the stock, if it tip back, have a bad day and tip back, may consider below 100, may consider buyback, because in fourth quarter, although I think the economy will be sorting it out, traveling still remains strong on holiday season, so that's one of the catalysts for this stock to going to go up. So out of the 7 mega stocks, somebody asked me what should I recommend for buying, right? So Amazon right now is going to the prime, and now really Amazon have been really badly beat up lately to go below the $200 level. Now it's like in a month or so, it rebounded pretty nicely to $230. But yet, I believe there's still a lot of room for AI infrastructure, cloud-based business to continue to grow higher. Some analysts target $305 for this stock, so I wouldn't say right or wrong, but if this stock, I actually bought just a few shares, not a lot, back slightly day before the Prime Day. So let's see how it's going. If it's gonna push the sales remains continued strong. The competition of the Amazon stock right now is PDD Pinduoduo, which is a Chinese stock that remains getting more and more presence in U.S. market. The stock actually have do pretty well, but the range is from $90 to $125, which right now is at a kind of near to that end high. I sold around $110 to $115 range in Pinduoduo, just for transparency purpose. That. The other one, as you know, Apple just pushed through the iPhone 17 and iPhone 17 Pro and Max. So I kind of go check it out. Although I don't know really the differences between that versus 16. They also a new iWatch that one of them like $800, $799. So it's really interesting that I think the market that, as long as the people which have holiday season coming, people will buy Christmas gift, as you know, that's bingo. That's the best time for, buying some Apple accessories items for your loved one. So I'm pretty sure seeing the Apple stock right now, maybe kind of looking pretty close to 52-week high. But yet, if you compare Mega 7, then the stock has not been going very well because of Trump administration. So they're talking about bringing the manufacturing back and all this good stuff, tariffs, war. So you really there's space for growth on this stock, and I really thinking If you tip back a little bit, it's good time to buy. I actually bought at about $200, so about $230, just that you know. But yeah, but some of the stock I should look in the short-term capital gain, and Apple will buy back, and then waiting for this stock, and this stock also give dividend, right? So it's a really good stock to hold, but it's just sometimes you have to be patient, and also as you know, the Apple car actually basically they canceled the project, right? So which means they really analyzing, understanding the EV space. They're not very good into it. They probably will be not a very at this point not a very good to be in the market to promote Apple car and thinking it will be profitable, right? Maybe it will grow the margin top line, but it's not going to be profitable. So next one is Tesla. Again, I talk about the infrastructure of Tesla. I think in the long run, this company I see is this. They're not gonna just selling EV in the future. There will be some other stuff manufacturing down the line. They have a way and technology, and they have the model Six Sigma, all this good stuff that in line to play for Elon Musk to come up with new idea to sell in this space in this under this company name. So I think in the long run, this stock will be very good. Although you have to watch for volatility, this stock really, really volatile. When the market get upset and presses down to $220 at one point, analysts really downgraded the stock and say this stock is worthless to $100 a share. And now it's $100 share. Election after election, a month later, $460, which is really 52-week high, and they get back down to like $300 low and $300 level again, right? And then basically get downgraded because of the competition of Chinese EV, and now it's pushing back to $400. So I would say the price that this is overpriced right now is kind of really momentum pushing, but in the long run, I still see this stock has a very good market value. Okay, and then the next one I want to talk about is let's do this one first because this one is a good one to make money. So for those who listen to my video, if you did buy the US Rare Earth, you ship around $14 at the time recommended to buy. But you go up and down even lower than that. If you bought it, now you're at least making money on this one. Not few percent they didn't beat the market, but again, this rare earth is a big thing that the US, if you hear the news, is all about. So was one of the stock recommended. I actually targeted for short-term capital gain. If you hit 1888, I would say walk or reduce exposure, but unless you really want to hold it long term. Then the one that's not doing very well, but I actually increased my presence to continue buying. I'm using playbook the same as HYLN. So the stock HYLN again was from $52 down to 52 cents. And in the journey, I bought some, sold some, and then I really holding quite a bit, a lot at quite a bit, and 80, 90 cents, and then you hit a dollar lush. So I really gain back basically the losses I made when I bought in very high value. This one is the stock have hit it pretty high at $1.80 if you see at a high end. So I didn't buy it quite that high, but pretty high value. And then the stock tipped back, I buy some more, and then actually below a dollar, like 90 cents and 80 cents, I did buy some more to dilute what I have on my hand. So if for short term or whatever you buy, you don't want to hold this stock anymore, I would say when you hit $1.15, that's your selling point and will exit this. But if you believe me and think this one is just going to play out like HILM, but I can't tell you how long you're going to hold, you will actually buy at this position now 90 cents. It's just waiting for that. And I would say, like $1.80 is the high end, and probably $1.30 will be a walking point, will be a good. Again, I hope you enjoy my video. Any questions, send me an email. And have a great and wonderful weekend. May you be really healthy, happy at work, and everything goes well, and make more money in the market. Thank you very much.